This is Kat Sturtz from rockingyourpath.com with another episode of Fast Action Fridays. Today, my special guest is Patricia Stallworth from down in, as she says, Hotlanta, Georgia. And we're going to be talking about savvy financial strategies. And her focus is women, but I know from reading her books that her advice is applicable to across the board, men, women, young adults, whoever is handling money, particularly their own funds, and would like to keep more of it and be responsible with it. So, Patricia, tell us a little bit about yourself and your background.
Well, I grew up in I don't want to say old-fashioned, but it is kind of an old-fashioned family setting where the thing that you did is that you let the man of the house manage your money. And that got me into a lot of trouble. While I was running around, calling myself saving the world by, I was a business consultant at the time. And so running around, saving the world, saving businesses and making people happy, I wasn't paying any attention to my money. I was letting my husband manage that. And turns out, he was not a really good money manager. And so I found that out when we were going through a divorce. And I was sitting there at the table when we were doing the settlement. And the thing that happened was we were dividing assets. And I took a look at the numbers for the assets, and they were extremely low. I mean, they were so low, I couldn't believe it. So I said, wait a minute, there must be a typo here. There must be a problem. There must be an issue. And they kept assuring me that, no, this was correct. This was correct. And so I realized something sitting there, that not only was I losing my husband, and I had just moved across the country to really support him in his job. So I didn't have a job and I had no money. And so at that point in time, I decided that the thing that I needed to do is I needed to figure out how money works, because I never wanted to find myself in that position again. Mm-hmm. And so once I picked myself up, because I fell down really low, once I picked myself up, then I started to do what any normal person would do at that time. I became a financial advisor. Because I wanted to know how money works, and so that started my journey to really thinking about it and learning about money. And once I started to learn a little bit about money, I decided other people need to know this too, because as I bumped into so many people, especially women, they really just did not understand how money works, and they too were falling into the same traps that I had fallen into, by letting their spouse handle it. In some cases, their spouses were very good at it. In other cases, they were not so good at it. So I found out that it's really important to take control of that. And that's how the whole thing got started with me back at my divorce.
Well, we're glad you took that deep dive, because I know a lot of us don't want to go there. Mm-hmm. I had a stepfather and step-grandparents who were accountants. Mm-hmm. Independent public accountants, not certified ones. On the farm with my first husband didn't know anything about financing. His mother handled it all and kept the books closed from him and from me, who I thought I was supposed to learn this. So while I do understand it, I'm not the best at applying it. And I know we've got a whole generation, a couple of them, growing up without essential money, financial skills. No longer do they do what you and I probably did. I know I did, and I suspect you did too. When you were a child, you had a savings account. You knew you put money in, and when you wanted to buy something, your parents helped you take that out, and you bought your special whatever it was. Savings accounts are kind of considered a bad thing anymore, or people don't even understand the idea of spending less than what you make anymore.
What a concept.
No, and somehow we've gotten away from understanding that the bulk of what we make in our jobs goes to necessities, mm-hmm. not the extra things that supposedly make us happy or whatever. And people get really upset when their necessities aren't covered the way they think they should be covered by their income. And you look at what they're doing, and it's like, you really have more money than you think you do. You're just not managing it well. You know, you get $500 and you want to spend it in 3 places, you know?
Yes,
Right.
yes.
So
And
I'm really glad that you took that deep dive. And
yes.
I want listeners to really understand, not only does Patricia know this stuff, she can explain this stuff in everyday language and help you apply this stuff.
Yes, it is. I'm going to date myself really bad here. When I was in school, we had savings bonds. And so every week you could bring in money and you could buy a savings bond or a portion of a savings bond. And there's nothing like that in schools today. I mean, they don't even talk about finance, let alone have something that encourages you to do anything. So yes, you're right. We do have a couple of generations where they don't know. They're just sort of, I guess they've picked it up from just watching what other people do. And the thing that's really so tragic here is that in many cases, they are watching their parents who don't know. Mm-hmm. And so it's just a continuous, a vicious cycle that they're going through. And then everybody ends up in this debt trap, you know, and they get stuck and they get mucked and mired in all of that. So many young adults today have so much in student loans and other things that are just going to tie them down for years and years to come. And the thing of it, and here's how bad it's gotten. They're talking about how home ownership has gone down tremendously. Well, of course it has. The generations cannot afford to buy a house. When you've got $100,000 student loan, you can't afford to buy a house. You know, that's so, yeah, it's going to have ramifications.
Yeah, it has changed. I know in high school, I was taught how to balance a checkbook. I had a simple accounting classes. It made sense. What high school kids and college kids get hit with now are offer after offer to take out a credit card, a special student credit card. Mm-hmm. Not a debit card, but a credit card.
Credit card.
And that's scary. That is scary.
Yeah. And they have large, limits on them. I mean, we're not talking $1,000 limit. We're talking $3,000, $5,000, $7,000 limits on these. So you can get in debt really fast, really easy. Mm-hmm.
All right. So I know that you've wrote the Profit Handbook, and I'll be including a link for readers to follow that. If you're just listening, you can check it out on Amazon. And you also have an updated version of your 27 Savvy Financial Strategies for Women. Yep, there's a copy of it. You can also find it on Amazon, or we're going to give you a link later on where you can download free a PDF copy of this. And like I said at the start of this, Patricia's information is targeted specifically for women, but there are nuggets throughout it that apply to young people, and it's really genderless, the information. And let's jump into some of the tips. What are some of the top tips you have to put us on the straight and narrow better financial management?
Well, I think the number one thing that I would say to you, and a lot of people are going to think that there's something crazy going on here, but your mindset is the most important thing. Your mindset accounts for maybe 80% of your financial success.
Oh.
And so a lot of people go 80%. It's like, yes, your skills are about 20%. And so when I work with clients, the one thing that I do is we spend time on that mindset, because that's 80% of your success right there. And so we spend a lot of time working on mindset because, it gets to be really important. If you think about some of the big lottery winners, we've all heard about how, many of them lose their money almost as quickly as they win it. And so having money is not the issue. The issue is, what do you do with that money? And so the mindset is the thing. And so that's why we work so hard on cultivating a wealthy mindset. And that's like number one. That's the number one strategy in my book, is how to cultivate a wealthy mindset, because it's so important that you do that.
Mm-hmm.
And so once you begin to understand the importance of your mindset, then we go through an analysis of really figuring out where yours came from and what it is and what's working for you and what's not. So inside of the book, there is an outline for you to do a money autobiography, because it's like you write your own money story.
Mm-hmm.
Your money story is the thing that drives so much of what you do and who you are and how you react, how you view money, how you use it, how you spend it, and really how you use charities. How do you give it away? I'm one of those woo-woo type people sometimes, and I believe in karma, and so you give money and your time and things to causes, and it comes back to you. So a portion of everything that you think about doing should be something related to charity. So we look at the aspects of spending and saving and charity, and really figuring out how, what's going to be the best path for you to take. So once you begin to understand your mindset and where you're headed, my next big tip is to understand your why. What does money mean to you? Why is it important to you? If you have it, what are you going to do with it? Because the thing about it is that the reason that so many people, look up one day and say, I had money and now it's all gone, is because they don't have a purpose for their money. So you need a purpose for your money. So what's the why?
Right.
And the why can't be just to accumulate money. It's got to be something bigger.
And money's not neither good nor bad.
No.
And it contributes to the flow of energy. It has its own energy flow.
Right.
So what you said earlier makes total sense. It's what you do with it that matters. And I want to address the mindset aspect that you put out as the first tip, and knowing that. I know people who know how to do financial calculations, know the ins and outs, are certified public accountants, have advanced degrees, that don't know how to manage their own money.
Absolutely.
And so it's not necessarily skill that's standing in their way or knowledge. It's their mindset that's stopping them from doing it. And even if you don't know those skills, if your mindset is to figure it out like you chose to figure it out, you can find that information, or at least hire a reputable someone else to handle it for you.
Absolutely. I bump into a lot of business owners who are doing very well, but at the end of the day, they have no money. It's like the business is doing well, and you would think that they would be doing well as well, but they don't know how to manage their money. Mm-hmm. And so one of the things that I do when I work with business owners is we set up a personal financial planning thing inside of that, so that they're managing that. Because a lot of people really, there's a misconception that all I have to do is earn money. If I can make money, then I'm going to be fine. But that's not right. There's two parts to that equation. The first part is really earning money. The second part is managing your money. So if you don't understand how to manage your money, or you don't do it, then it doesn't matter how much money you earn. You're never going to get to that point that I call financial freedom, where you have the ability to live the life you want. You can work if you want or not, or whatever, And so many people fail to get to that point, not because they don't make money. It's because they don't manage that money.
Absolutely. All right. So tip number one was know where you are with your mindset, and get it straightened out in terms of your money IQ, I guess it would be.
Oh yeah, that's one way to put it. It's all inside your head. Get your money head together, kind of thing.
Okay, so two is understand your why. What do you want your money to do for you, and how it's going to be applied to your life, so you can live the life you want.
Absolutely.
All right. So what's number 3?
Well, number 3 is going to really jump down into this to an important number that you need to know. So we'll talk about an important number, and that important number is your net worth. When you begin to think about, keeping score or understanding where you're at, you need to know your current status, and that's your net worth. And your net worth is a simple equation. It's really just adding up everything you own, and then subtracting everything you owe, and then what's left over is your net worth. The real key to net worth is to see this grow every year. Now, what happens to a lot of people, especially today, when they add up everything they own and everything they owe, they come up with a negative number. And then they never want to look at it again. It's like, I don't want to go there. I mean, it's like, I don't need this, I don't need this. But
it's too stressful to look at that number, so we ignore it, and it seems to multiply like dust bunnies.
Yes.
That negative number.
So when you do that, if you find a negative number, that's an opportunity for you. And that's an opportunity for you to make that number go up, and it's like, so what do I do now? So that's your, what do I do now? That's your wake up call. I'm in a negative net worth. So what do I need to do? So when you find yourself in that negative net worth, then there's a couple of things you can do. Number 1, you can add more to your assets, things you own. So, depending upon what your situation is, it may mean that by adding more to your assets, in a sense, let's say you purchased a house. And so you have your house, which you have equity in your home, and you have a mortgage maybe that you still have to pay. So by paying more of your mortgage, paying off more of your mortgage, that means that your assets are going to go up because your equity in your home is going to go up. The more debt you have, then if you start to whittle down on that debt, then your liabilities are going to go down. So your net worth is going to go up. So it's really a matter of thinking about, I need more assets, or I need to get rid of more of my liabilities. And so the thing that happens with what I tell my clients is always set a goal for how much you want to increase your net worth each year. So you think about, I want to increase my net worth by 10%, or I want to increase my net worth by $30,000, whatever, either an amount or a percent. And then that gives you an incentive, because every time you start to think about, okay, I could go buy that boat or that scooter or something, it's like, wait a minute. Okay, yes, that's going to give me an asset, but if I can't pay cash for it, that's going to give me a liability as well. And when I pay cash for it, it's going to take my assets down because my cash asset's going to go down. So you need to really start to get very strategic about the way you make, especially large purchases. What's it going to do? How's it going to help you?
I love the distinction between having a goal to improve your net worth versus having a goal to improve or increase your net revenue or your paycheck. Because this goes right back to that mindset. People do get those raises. They do improve their businesses. They have more cash flow coming in, but their net worth is still dwindling because they're spending it often faster than it's coming in. They upgrade to that house they deserve, with the vaulted ceiling and, and in the 4 bathrooms, because heaven forbid 4 people in the house share one. It's like, it's really
absolutely
focusing on growing the net worth as that special number. I don't know if you have another name for that, but I think that's really key. That's really smart and really nails that distinction of why those first 2 tips are so important to understand and manage for yourself.
Absolutely, because the thing that happens is that we sometimes get lulled into thinking that we're doing well. because we're not really looking at our numbers in a sense, but net worth brings it home. It's you either have it or you don't. At the end of the day, if you had to sell everything, all your assets, if you had to sell everything, liquidation sale, and pay off all your debts, what do you got left? It's like, and many people find that they'd have to get a loan to pay off their debts, to be able to leave town, for the liquidation sale. So it's really a scary thing. And it's an easy number to do, but it's really scary for the first time, when you do it the first time. But once you get used to it, and once you start to see it growing, it's like, wow, the thing that I think that's so bad is that people love to brag about what they have, the material things that they have. I want to see people brag about their bank accounts. It's like, yeah, I've got, my net worth went up by 20% last year, things like that. So that they begin to like, wow, how did you do that? And so then that becomes a conversation. It's not saying, people, there's still this taboo on talking about money, but to be able to say something like my net worth, then that's easier to have a conversation with other people. And so I think it's really cool to do that.
The term that just came to my mind was the comparison to someone who wants to lose weight or bulk up. And this would be their financial weight goal. Only in this case, we want that weight to go up. We want our financial weight to go up in terms of net worth in there.
Yeah.
All right. We've got a couple minutes. I'd like you to address two things. One, that very scary thing about looking at our numbers. Is there anything we can do to get past that fear of facing what those numbers are, whether, good or bad? Because if you don't know what they are, you don't even know how close you are to them being good. And two, the fear that I hear in people all the time about making more money or managing their money better is that the government's just going to take it in taxes anyway. And I think that goes right back to mindset. So what do you have to say about those two things?
Okay. Well, number one, in terms of the scary part of looking at your numbers, it's kind of the Band-Aid thing. Just rip that puppy off. It's like, but the thing that's really important is that you can't get started until you do. I mean, it's like you're stuck there. It's I've seen people who don't look at their bills. The bills comes in and they just put it in a drawer and they don't want to look at it. But that bill's not going to go away. I mean, that bill is still going to be there, and it's going to keep adding interest and other things to it. So you may as well look at it. So one of the things that I tell some of the women I work with is like, put on your big girl panties and just do the number. Just do it. I mean, this is time. This is your life. This is where it all starts at. If you don't know where you're at, you don't know where you need to go. And so you have to just do it. So that's number one. And there's ways to sugarcoat it a little bit, but I'm not that sugarcoating person. And I just tell them, just do it, And so the scary part is that it's not always as scary as you think it's going to be. And so you just have to do it. For the second part of your question, I'm sorry, tell me again what the second part was.
It was about taxes. People who are afraid of managing their money better, thinking that the government's just going to take any excess anyway.
Yeah. So that brings me all the way back to my divorce, because that's why we had no money, because he was afraid that if we made money, then the government was going to take it. And it's like, so we had no money. And it's like, okay, that's not a good idea. Here's the thing that I always tell people: be thankful that you have the money to pay the taxes, because there's so many people who don't make enough to pay taxes. So they can't live the lifestyle that you live. They can't do the things that you do. And there are ways, there's tax shelters, there's all kinds of things that you can do to shelter some of your money. So that means that gets back to mindset again, where you're going to talk to a tax professional to see if there are things that you can do to lower your tax bill. but you're not going to stop making money in order. I mean, it's like you're cutting off your nose to spite your face. It's like, don't do that. I mean, it's really, like I said, 80% in your head. I mean, it's really all there.
And if you really want to help people, helping people usually costs money in some form or another. So you have to bring that in and manage it well, so you're in a position to share it.
Absolutely. You can't do anything for anybody until you help yourself first.
Yeah.
It's like they tell you on the airplane, put the mask on yourself first, then help somebody else.
Right.
Same thing. Yeah.
And here at Rocking Your Path, stepping out of that comfort zone and being willing to move forward, where the fear of staying where you are is bigger than the fear of stepping into the unknown, comes right into play when it comes to facing your financial situation and improving that. So one thing I like to tell people is plan a little gift, a little non-expensive treat for yourself once you rip that Band-Aid off and take the steps to look at that. Could be something low cost. My former go-to was a bag of barbecue chips and a tub of French onion chip dip. Okay. Now it might be a special trip up to the nature center for one of their events. But again, decide. This goes back to that mindset. Are you really more afraid of staying where you are, or are you ready to move forward? So I want people to pick up your Profit Handbook and the 27 Savvy Financial Strategies for Women, which will add to these wonderful tips.
Yeah.
You can't ignore those first 3, though. I know it from personal experience. I'm one of those who knows how to do it and doesn't like it. And I really try to do something different than a lot of people. A lot of people wait till Friday and pay their bills on Friday and manage their books. I can't stand to end my week that way. So I usually do my financial bookkeeping on Monday. Get it out of the way. Pull that sucker off right at the beginning of the week,
That's right. That's right. That's a very good idea. A good way to do it. Yeah.
All right. Well, thank you for being a return guest on Fast Action Fridays. And I know we're going to have you back again in the future sometimes. We will have ways for you to, listeners, to find Patricia. She's Patricia Stallworth. You can find her on Facebook and again on Amazon. And this is Kat Sturtz from Rocking Your Path, closing another episode of Fast Action Fridays. Come back and see who my special guest is next week. And remember to always rock your unique path to success.